But shift focus then to Hinduja Global Solutions now. Parthiv Sarkar, CEO of the company, joins in to talk about the numbers. The stock today is holding out in the positive zone, gaining about 7% odd. Great to have you with us, Mr. Sarkar. First up, if you can give us the key operational takeaways of the closing quarter on a sequential basis.
Yeah, I think the thing that I would like to mention first, before I get into sequential quarter numbers, is that this quarter actually helped us cross a major milestone of the company. We are at about $507 million, just crossing the $500 million mark. And this, when we started off, we were just a $50 million company. So from 50 to 500 has been an amazing ride. Now, coming to the specific quarter numbers, again, I think more than the quarter, I would like to emphasize more on what we've achieved in the full year. So if you look at the full year, the numbers, the growth numbers are about 18.4%. And that includes our inorganic growth as well. If you were to strip away the inorganic growth component of that, the numbers are about 10.4% in growth terms. This quarter, we have been able to substantially improve our profitability. The pressure on profitability was on account of some of our onshore delivery centers. Those have turned around. We've broken even in March, and the Canadian operations are expected to contribute positively in the coming year. So that turnaround has helped this quarter. Also, the India domestic business that we acquired in September last year, that has turned around as well. And it's break-even as of March and expected to contribute in quarter one. So these were certain drags that we had in our first 3 quarters. And as a result of that, you will see that our profitability has jumped in quarter 4. That is just to focus on this quarter. But overall on the year, we started slow. We picked up momentum during the year, and we're finishing strong with this quarter 4 results.
To know, let's talk a little bit about what is in the pipeline in the coming quarters. How does the 12-month order book stand compared to what it was last year, and what kind of ramp-ups have we seen from the large wins that will reflect this fiscal?
This year, if you look at it, about 4.3% of our revenues have come from absolutely new logos, so which is a reasonably good number. When you talk about pipeline, we have, again, I would say that we have a very good quality pipeline. I expect a lot of business to grow offshore in India, Philippines, and our nearshore destination in Jamaica. So the growth will principally come from the offshore destinations. Today, offshore contributes about 43% of our revenues. Our attempt is to grow it to about 46% of our revenues, because that's what helps us in improving our margins. We are also focused on filling up some of the excess capacity that is currently there in our onshore destinations. If that comes in as well, I think the growth numbers will again be very good. If you look at our history, our growth has been very strong. We probably are the fastest growing company in our peer group.
What's the latest that you can share on Mphasis acquired business, and is its integration complete? What kind of revenue as well as margin bump up is it going to provide over the year?
We had mentioned that that business will be break-even as of March. Happy to report that that has actually happened. And therefore, from this year onwards, it's going to contribute in high single digits, which is typically the margin profile of India-generated revenues. So that will be margin accretive starting this fiscal. It's given us a great footprint. We didn't have too much of a presence in North India, and it's also embellished our Western India footprint. So those things are going to help us sell more to a larger number of clients who are starting to operate in India, particularly in the e-tail space. So I would say that that business is expected to contribute in high single digits in margins for the company.
Have the operating expenses normalized after the sharp increase that we saw in Q3? And also based on the evolving business mix and cross-currency moves, how do you see your EBITDA margins reading this year compared to last?
I think because of the pressures that we had in Canada last year, the EBITDA margins had taken a big hit last year. We see that improving, and I think the Q4 results that you see are the beginning of that climb up. So the margins will improve. We will have to push in capacity utilization. As I said, there is some amount of excess capacity in our North America footprint that we are going to make it more efficient. And overall, I would say that the margin trajectory, we need to be back in the double-digit margins that historically was our margin profile. So we are starting with a single-digit margin of this fiscal. We'll push it to, let's say, 100 to 150 basis points. That's the outlook that we have. We should be able to pull it off given the way the pipeline's looking, given the way the capacity utilization of the offshore destinations are moving up. We should be able to push that about 100 to 150 basis points.
All right. Mr. Sarkar, thank you very much for chatting with us and sharing those important numbers as well as details of how business is shaping up for you.
Thank you.
Well, that's the word coming in from the management of Hinduja Global. The stock is clearly basking in the glory, 7.5% of an uptick coming in, though the stock is off the day's high, but still managing to hold out. But take a look at the markets as well at the